Now this is the kind of move that I really like. We've this is the start of a new day here, and we started our up leg at 174.40. We have rallied, and there was an economic report that stimulated this move. And as the price starts to rally up, what you have to do is, of course, if you're not in this trade already, there's a potential that if we move to max range plus 25 to 50%, or even if we don't quite get to max range, there still may be a trading opportunity to trade a bounce, but you are trading into a trend, and keep that in mind, and that is high risk. So what we would do is we would look at our 7,600, in this case watching the British pound US dollar cross. We'd look at 7,600, but we'd also look to see if it converges with other factors like other natural support resistance on daily chart, 4-hour chart, 1-hour chart, a Fibonacci level, a pivot level, and so forth. I mean, you understand that now. So we'll look at 7,600, and if I'm going to trade or anticipate a bounce at 7,600, I'm stocking this trade. And the market may not get there, and I may have to just simply pass on the trade for the day. And I'm comfortable with that. I'm totally comfortable with passing on a trade. If the market only comes up to 75.80 and bounces, then that's fine. I missed my trade. Even if price gets to 7,600, I still may decide not to trade it. But if I decide that this is a significant level and I think that I want to trade it, I usually trade it between about 75. I'll trade it between 93 and 99, or 92 and 99. It all depends on how I feel liquidity is, or the movement of the market is, and if we might test 7,600. Sometimes, sometimes I'll go 92 or 91, and sometimes I'll actually go 7,600 or 7,601 or 2 or 3 if I think it's going to slip through by a little bit. And the higher, the closer it is, the better. And I usually take a 25 to 35 pip stop and take a position size relative to 1 to 1.5% of my available equity for the trade. And so that's what I'm looking for. Now, watching this currency move forward, we see price comes up and it spikes up. I like the fact that it's moved from 74.60, pretty directly up to a high of 75.94, which makes it tradable. It's immediately rejected to a low of 62, which is 66 with spread. And so we had a nice chance to make maybe something off the first bounce, and then you had to wait to maybe take some profit at a later time as price drifts down. And this is very common. After a large move like this, price will just drift down, and often it drifts down to about a 38% retracement. And here's our 38 here, but it holds in this case, and then now it starts to drift down. In any event, we see a move from 7,600 all the way down to 75.20 eventually. So if you took some first profit and then maybe a little bit along the way as it drifted down into the next session, and this is the next session here, into the next session here, then you could get a pretty substantial move to the downside. But I really like these kinds of trades like this, where it spikes up like that. A very weak, moves 50 pips direct, spikes right up, and that's a very tradable scenario.